Hello, and welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today is October 8th, 2025, and we are breaking down the NZDUSD currency pair. We're facing a fascinating situation where major fundamental drivers are pulling the market in opposite directions. First, we'll cover the crucial news events, and then we will dive into the daily, hourly, and 15-minute charts to see what the price action is telling us. The biggest story right now is a tale of two central banks and one government. On one side, persistent fears of a prolonged U.S. government shutdown are putting significant pressure on the U.S. dollar. News reports indicate the shutdown has already delayed key economic data, creating uncertainty and weighing on the greenback. This has provided a tailwind for the Kiwi, helping NZDUSD hold steady above the key 0.5800 level. However, pushing in the opposite direction is the Reserve Bank of New Zealand, or RBNZ, which has a major policy decision coming up tomorrow. The market is overwhelmingly expecting a dovish pivot from the RBNZ, following a shocking Q2 GDP contraction of 0.9%, far worse than the bank's own projection. Most analysts are pricing in a 25 basis point rate cut, but there's a notable 30 to 50% probability being assigned to a more aggressive 50 basis point cut. This expectation of monetary easing is a major headwind for the New Zealand dollar. So we have a classic standoff, a weak US dollar due to political turmoil versus a potentially weaker New Zealand dollar due to a dovish central bank. This has trapped the pair in a consolidation phase as traders await a clear catalyst. Now, let's turn to the daily chart to understand the bigger picture. What's immediately clear is the long-term bearish trend that has been in place for months. After peaking near 0.6350 in late September, the price experienced a dramatic sell-off through the first week of October. Looking back further, we can see several instances of extreme volatility and massive downward moves, especially in late 2024 and early 2025, which firmly establishes the dominant bearish market structure. The price has been making a series of lower highs and lower lows. However, for the past week, the selling has paused, and we've entered the consolidation range we discussed, bouncing off the recent lows. Let's identify the critical levels on this daily time frame. The most immediate and significant resistance is at 0.5850. Multiple reports confirm that sellers are likely defending this zone fiercely. A clean break and hold above 0.5850 would be the first sign of a short-term bullish reversal. If buyers manage to clear that hurdle, the next major resistance target would be the descending trend line, currently sitting around the 0.5950 area. To the downside, the first level of support is the psychological 0.5800 mark, which has been tested multiple times recently. A more substantial support level lies at the late September low, right around 0.5750. This is the key level that bears will be aiming for if the RBNZ decision sparks a new wave of selling. Currently, we are trading right in the middle of this tight range, defined by 0.5800 support and 0.5850 resistance. Now, let's switch to the 1-hour chart to get a better look at the recent action. Here we can clearly see the rally that started on October 3rd, which lines up perfectly with the escalating fears of the U.S. government shutdown. That move took us from below 0.5800 up to test the resistance near 0.5840. Since that peak on October 6th, the price action has been decidedly sideways, confirming the range-bound behavior we've been discussing. You can see the price oscillating between roughly 0.5800 and 0.5840, just chopping back and forth. This shows a market in equilibrium, waiting for new information before committing to a direction. At this moment, we are testing the lower boundary of this short-term range, a critical spot ahead of the RBNZ news. Zooming in even further to the 15-minute chart, we can analyze the intraday sentiment. Looking at the past 24 hours, you can see the price attempting to push higher yesterday, but failing to gain traction above 0.5840. This failure was followed by a steady drift lower, bringing us back down to the 0.5800 support zone. The very tight candlesticks and low volume over the last few hours show extreme indecision. The market is essentially frozen, holding its breath for the catalyst that will break this deadlock. So, to recap and look ahead, let's pull back to the daily chart. The key levels to watch are resistance at 0.5850 and then 0.5950, with support at 0.5800 and the major low at 0.5750. Here are two potential scenarios. The bullish case, which I see as moderately likely, perhaps a 40% probability, would be triggered if the RBNZ delivers only a 25 basis point cut and signals a pause. If this is combined with continued US dollar weakness from the shutdown, we could see a decisive break above 0.5850, opening the door for a rally towards 0.5950. The bearish scenario seems more probable at this point, with about a 60% likelihood. This would happen if the RBNZ surprises with a 50 basis point cut or issues extremely dovish forward guidance. This would likely shatter the 0.5800 support and send the price spiraling down to retest the 0.5750 lows, or possibly even lower. Any positive news out of Washington that resolves the shutdown would add major fuel to this bearish fire. The most important thing to watch is the RBNZ announcement tomorrow. It will almost certainly dictate the next major move for this pair. That wraps up our analysis of NZDUSD for today. Remember, this is for informational and educational purposes only and is not financial advice. The Forex market is highly volatile, so always conduct your own research and risk management before making any trading decisions. Thanks for watching Explain the Charts, and we'll see you in the next video.